Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange bringing you a review of this week's stock market. On Monday, the flash PMI manufacturing index for October jumped almost 2 points to 53.2, its strongest rate of growth since October of 2015. U.S. crude fell slightly to settle at $50.52 a barrel when Iran said it would like to be excluded from an OPEC deal to cut oil production. On Tuesday, the Case-Shiller home price index for August showed modest gains of 0.2% month over month and 5.1% year over year. Consumer confidence for October was almost 5 points lower at 98.6. On Wednesday, new home sales for September increased 3.1% to an annualized 593,000 units, and the EIA petroleum status report for the week ending October 21st showed crude oil inventories decreasing by 600,000 barrels. The flash PMI for services in October was up strongly by almost 3 points to 54.8. 10-year U.S. Treasury notes yielded 1.79%, with yields rising as traders are betting a 73% chance that the Federal Reserve will hike rates by the end of the year. On Thursday, durable goods orders for September were down 0.1%, and jobless claims for the week ending October 22nd fell 3,000 to 258,000. The pending home sales index for September rose 1.5%, its highest gain since April. Bonds in the U.S. and Europe rallied as traders speculated that stronger economies will soon lead to central banks tightening their monetary policies. The U.S. Treasury's 10-year note shot up to 1.85%. On Friday, the third quarter GDP came in at 2.9%, higher than expectations and boosted by exports. The employment cost index for the third quarter rose by 0.6%. Markets were up modestly on the news. Now let's take a look at some stocks. Chipotle Mexican Grill saw its net income fall to $7.8 million or 27 cents a share compared to $145 million or $4.59 a share from the same period last year. Revenue fell 14.8% to $1.04 billion. Chipotle is still recovering from the E. coli scare and continues to attempt to win customers back with various promotions. The company's shares are down over 36% over the past year. Apple reported quarterly earnings with better than expected iPhone sales. The company reported earnings per share of $1.67, slightly higher than expectations. However, revenue of $46.9 billion was shy of expectations. Shares surged after hours on the earnings release, but later fell below the closing price of $118.25. Tesla Motors smashed analyst expectations on Wednesday, earning 71 cents a share on $2.3 billion in revenue. Analysts had predicted a loss of 54 cents per share on $2 billion in revenue. Tesla was up over 5% in after-hours trading and reiterated its forecast for 50,000 new vehicle deliveries by the second half of 2016. Sprint reported a smaller loss than expected as the company continued to add customers. Analysts had projected a loss of 8 cents per share. However, the company reported a loss of $142 million or 4 cents per share compared to a year ago loss of $585 million or 15 cents a share. Revenue rose 3.4% to $8.25 billion, also beating analyst estimates. Under Armour saw its shares drop the most in more than 7 years after the company warned that its growth rate will be less than expected. The company now expects revenue to increase in the low 20% range during 2017 and 2018. The athletic retailer is also investing aggressively overseas, opening more stores. Gross margins for the third quarter fell to 47.5% from 48.8% a year ago. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.